Okay. So we're live on Facebook now. So I want to say thank you to everyone who's watching on Facebook or watching on the Zoom call. This is part 2 of our Let's Talk Town Hall on the tax reappraisal process. We're going to go over what a tax appraisal is, why we do it, and how the process happens. And we're going to even sprinkle some frequently asked questions in. I'm going to go really quick with some house rules. First of all, if you're watching this on Zoom, there's Spanish interpretation. If you're watching it on Facebook, you can listen to it in Spanish by visiting Health and Human Services Facebook page. If you have questions, I will be monitoring chat on Facebook and in the Zoom call. And if we don't have time to get to them during the town hall that we're having live, then we will definitely pass it along to Keith and his team and make sure that the answers get out there. This is the second time we've done this talk. And we're going to go over some of the topics that we talked about in the first one, but we're also going over some of the community questions that we got as a result of the first one. As stated in the first one, you can email questions to realestate.questions@buncombecounty.org. And also remember, chime in with your questions because this is a community conversation. So with that, I will say, let's introduce Jeff and Keith with the property department. The tax department. Sorry.
It's okay. Hi. Thanks, Max. Keith Miller, Buncombe County Assessor.
I am Jeff Candler, Chief Appraiser.
Okay. So we'll start with the first question. What is a reappraisal?
Yeah, thanks, Max. So a reappraisal is something that is prescribed by the North Carolina General Statute. All counties have to do it, not just Buncombe. All counties have to follow that procedure. And a reappraisal is about the value in all real property in the county to bring that up to market value. And really then the reappraisal starts reestablishing uniformity in those assessments by doing that.
So a reappraisal is the changing of tax values for property.
Correct.
Why do we do them?
Well, the values are changed because the statute says your value, everybody's value, each individual value for your property must be at 100% of market value in a reappraisal year. So as time passes between reappraisal years, then there's becomes different gaps in that between market value and what your assessed value is. And different neighborhoods change at different rates. So the gap gets bigger in some neighborhoods and smaller in the others. So then reappraisal will, then during that process, we reassign a new market value to all properties to do away with that difference between the last reappraisal and what market value would be today.
Okay, and how often do we do them?
Buncombe has typically been on a 4-year cycle. The statute requires every county a minimum of every 8 years. But that same statute gives the commissioners the authority to also advance that reappraisal to happen sooner than every 8 years if they so wish.
So our Board of Commissioners voted every 4 years we do a reappraisal.
Currently, we are set to do it every 4 years. Now, I will also say that there's other triggers in the statute that if we start getting too far away from market value, there's some triggers there which says the sales ratio study falls below 85%, then the county must also do a reappraisal. So sometimes it's even out of the hands of the commissioners about when we do it. The statute also can say you will have to do it regardless because of the triggers that happens.
Okay, but we are having a reappraisal right now, starting next year, right?
Yes, the reappraisal will be effective January 1 of 2021. Our staff is currently working on that. We've been working on it. It's a long process. It's a lot of hours that we put into it. So we will continue to work on it right through December up until the 1st of January.
So how do you value people's property?
The value of your property, and let's define market value. And the statute says your property should be at 100% of market value. So what does that mean? Market value means a value which a willing buyer and willing seller would be willing to exchange the property for X amount of dollars. So that's what sets the market. when I purchase a property and I pay X dollars for it, then I have established what the market value for that property is, because that's what I am willing to pay for it. So if you want to know kind of what the market value of your property is, then look around your neighbors, look in your neighborhoods, other properties that have sold which are similar to yours, and that will start helping you understand better what the market value of your home should be. And because that's how we do it. We're going to look at all those sales, and we look at a lot of statistics. We build models around all those statistics and plug that into different areas of people's homes to determine what the value should be. But in the simplest form, what somebody's willing to pay for it is market value, and our job in a reappraisal is to take the transactions that have happened and try and interpret what that means to your individual property.
So you base someone's property value off of market value based on purchased homes already.
Correct.
So I read on the website that each property is valued by three things: the sales comparison, which you just mentioned, cost approach, and income approach. What are those last two?
So cost approach is an estimate of what it would actually cost you to build a home similar to yours. So what is those 2x4s and bricks and mortar and shingles, all those things are going to cost to build another home like yours. That's what cost is. Now, cost does not always equal market value on the sales comparison approach, because cost could be less or cost could be more. Income approach, not so much on the residential side that's used. That's a commercial tool there. We apply that to the commercial, and the value of your property in the commercial is determined based upon its ability to produce income and what an investor or an owner would pay for that income for that commercial property.
So what do you mean by property? I heard you mention commercial property and regular property. What property counts in a reappraisal?
Well, all real estate, commercial and residential, all real estate we do in the reappraisal.
Okay.
Personal property is reappraised every year, unlike real estate. So any real estate, residential or commercial, is in the reappraisal process.
So I'm going to go back to the tax now. So how is property tax rate set? Obviously, the reappraisal of your property could change in value by going up or down, but who sets the tax rate, and when is the tax rate set?
So the tax rate is set by the Board of County Commissioners. The tax rate is set typically during the month of June every year to become effective July 1 of that year. So again, how that is determined is based upon what the taxable value of the county is. So as we do reappraisal, or as values change, then as the commissioners decide what they need as far as revenue, then they take that taxable value and compare it to revenue, and then they'll set a rate. That rate then will determine how they get that revenue. So the rate can be set every year, unlike the reappraisal cannot be. You cannot have your property reappraised every year, but the rate can change every year.
Can you explain the process of revenue neutral?
Revenue neutral is just a measurement, and what that means is that in the reappraisal year, it must be reported what the prior year revenue was and value versus what the current value is and what that revenue would be. So what does it take if the value goes up in a reappraisal year? Then what should the rate be to generate the same amount of revenue that was generated in the prior year? So that's the revenue neutral, which means that the revenue would not change, although the value changed. So that is a measurement that is reported every time we do a reappraisal.
So for example, if your reappraisal comes back and your property is more, the commissioners might determine, well, we don't need this extra reappraisal, so we'll lower the tax rate so it all evens out for the seller.
Yeah, perfect explanation. Yes. Just because the value goes up does not mean that necessarily your taxes will go up. Often, some people's taxes could even come down some. So it's, again, remember, reappraisal is a performance of equalization. So an equalization means that some go up, some come down, and that does often happen. people often look at reappraisal as all the values are going up and everybody's taxes are going up, and that is not really true. Many people's taxes will go up, but some may come down. And you're right, Max, it's totally up to the county commissioners on the tax rate, totally up to them on how much revenue that they want to generate for their budget. So only thing we do here in the assessor's office is value property. We do not set tax rates, and we do not determine budgets on how much someone pays. So again, only value. So if you want to talk about value, we're happy to do that with you anytime. But if you want to talk about then how much that produces in taxes, we have no control over that.
We have a buncombecounty.org/commissioner site you can go to for those questions.
Yes.
So you mentioned market value and you gave a really good explanation about it. So I think a lot of people can be confused on what the difference between market value based on your assessment of property is compared to something like a Zillow estimate or a real estate estimate, or what even people are marking their houses for on real estate websites. Like, what is the difference between that?
Well, a service such as Zillow, which, you know, does a fairly good job in most cases, but Zillow is 100% driven by algorithms, which looks at properties of similar types of yours in general vicinity of yours, and will start extracting the sales process from those and then apply it to yours. And this is done in all means of electronics. You don't have any human interaction in that. It's just a computer sitting there generating a value. But what often Zillow doesn't know is, well, what about that sales price? Was it truly a qualified sale? Did somebody truly pay that price for that? Or was it, did they not pay enough for it? Was there some circumstances that surrounded it that we didn't know about? Was it a family transaction? Was it a forced sale? So there's a lot of times that Zillow don't know some of the things that we know related to those transactions. So although Zillow can be a good tool and Zillow can give you some idea of kind of where your property should be, I would caution you to not rely solely on that. Take the information in which you may gather from Zillow, and you can qualify that information yourself. So if Zillow says the house down the street sold for $500,000, then you go and look at that house down the street and see what you think about it and make sure that it is a qualified sale. So other times people look at transactions, and we do what's called mass appraisal. So we do not do independent appraisals of each individual property in this county. That would take a staff of people humongous, and we don't have the time nor the staff to do that. So in this business, we do what's called mass appraisal. And that means we appraise groups of property which are similar. So we can group together properties of like neighborhoods, of like size, like quality, and we can apply value to those houses in groups. But what happens in the mass appraisal process is inevitably you will get some a little high, you'll get some a little low. So that's where we depend on then the property owner to come back to us and tell us where we may be a little off on those values. So we do depend on their help. We depend on every property owner's help to be a partner in this with us and help us do the right thing. It was another part of your question, I think, Max. Did I get all that? Or
Yeah, I think so. The idea of if you get your value, because we're going to be mailed our values, like the timeline is as of January 1, the new value, you should be getting a notification by February, is it?
Right. The new values will become effective January 1, and we should have notice in the mail to all the property owners in the county sometime around the 1st of February. So you're going to get a form in the mail that's going to show you what your value is. It's going to tell you about that value, and it's going to tell you what to do if you disagree with that value. It's going to give you some options of what you can do to communicate with us about that value. So this year may be a little different just because of COVID. We're hoping and going to encourage the citizens to, they can call here, they can file appeals online, they can call and make an appointment. There's other things that they can do, and we will work with them to try and, you know, answer their concerns in the best way that we can.
So I had one last question about the reappraisal process, and that's when you said that properties are grouped together. So as you said, it can be based on type, on size. So what you do is you take every house in this region that has what, 2-bedroom, 2-bath on this amount of property or something? Well, like what are the specific things you look at in these properties to group them together?
Yeah, so the easier way to look at it is within a defined subdivision. So most subdivisions will have, you know, houses that are within an acceptable range of, let's say, 1,000 to 2,000 square feet. So what we'll do in that subdivision is we'll start then pulling out all the transactions of homes, possibly between 1,000 and 1,500 square feet, 2-bedroom, 2-bath, average quality with a 1-2-car garage. And we start putting those together and say, well, now these homes are all very close and similar in characteristics. So our model says a house like this should be valued at X. So then we apply X to this group of properties to produce a value. And those values will still fluctuate a little up and down because all properties are unique. All properties have different things. Yours may have a fireplace, mine maybe doesn't. Yours has a basement, mine maybe doesn't. So we also compensate for those things in those models that we build.
Great. So you had a good segue a question ago about the idea of going to the website and using the contacting you for appeals. So that's a good link to discussion about the PRC and the soon to be released Comper tool. And that's where we go over to Jeff to give us a little tour of it. So what is PRC, Jeff?
Hey there. So PRC, it stands for Property Record Card. This is a new tool that we've made available on our website to help property owners to be able to identify their property, look at property details, what we have listed on their property. Let me pull this up so I can share with you. Okay, can anyone see my property record card screen?
Yes, good.
Okay, so I've already done a selection for a property, a random property, and you can see that we have a photo of the property. We'll also have a sketch that has the breakdown of the different sections of the house itself. You can see the aerial photography with the property lines. As you scroll down, you can see the assessment details. This is where you can see the breakdown between your land value, the value of the home itself, and if there are any additional structures on the property, you can see the values of those. There are some links that you can select and click on, such as this plat reference. You can click on that plat book and page, and that will take you to the Buncombe County Register of Deeds, where you can actually pull the plat up for your property. As you scroll down, you can see some basic land information, the assessed acres that we have. You scroll down to the building. Here you can see the different attributes of the building. You can see where we have this as a ranch style house built in 1965. Show it has 4 full baths, 2 fireplaces. This gives the property owner an opportunity to see what the tax office has listed on your property and verify that this information is correct. And I really hope that the citizens will get used to this tool and spend time and look at their property to make sure that what we have listed on your property is correct. We get a lot of appeals every 4 years that are quickly solved because we go through and look at this property detail information, and we can make corrections that will solve the problem and bring the property value in line. Where, you know, if we start looking at this now, we can get the property information correct to begin with, and maybe eliminate some of that in February. As you scroll down, you can see transfer history. You can see transfer dates when this property's previously sold, as well as the hyperlink for the deed book and page that will take you to, again, the Register of Deeds, where you can view this property deed. And then
everyone to use this site to make sure all the information is.
Yes.
What happens if they read something and they think it's incorrect?
I'm sorry, I couldn't understand you, Max.
Sure. What happens if something's incorrect that they notice?
So that's a good point, Max. If you scroll through and you say, hey, you know, you're charging me with 3 bathrooms and I only have 2, at that point you can click on this blue line, see an issue. You click on that and you submit any changes that you have that you want us to be aware of. We will go through and look at those changes. Some we'll be able to change on the fly. Some may require us to come to the property and do a quick check. But that's the best way to get started.
Okay.
And there are other links on the PRC page where we go to, we have Discover Buncombe. I don't know if you want to get into what that is at this time, Max. Maybe we can do that at a later date. There's billing questions and how to appeal your property. You'll be able to appeal your property from this page. It's not open for appeal yet, but when that time comes, that will be available as well.
So I do recommend everyone go visit Discover Buncombe when you can, because it shows some really interesting stuff about your property. And I know that we're having another tool that's coming out soon called Comper that's going to help people more assess the market value of their house. Can you talk more about that? And when
Sure. Yes, so we have another tool that's another product that works in conjunction with our PRC, and it is called Comper. So with this tool, you'll be able to enter your property information, and instantly this program will pull all the comparable properties in your area, the area of your home, and you'll have a selection. If there's 10 or 12 properties that are comparable, it will pull those up, and you'll have an opportunity to look at what these properties have sold for, and you can use that sales information to compare what we have on your property. If you're thinking that you may need to do an appeal, you think your value is too high, you can pull this up, and you may find a couple of comps to support your theory that we are too high. Or there again, it may prove that we're in line with what the value should be. We hope to have this up and ready in the next couple of weeks. So, and I think in the future when we do another one of the town halls, we'll probably do a demo on that. But be looking for that product in the next couple of weeks on the website. And
someone in chat just said, what does green certification mean? That's one of the listings here, right?
Mm-hmm. So yeah, green certification, we look at, there's many properties, many new homes that are being built. They are LEED certified. There are 4 different categories of certification within LEED. And our sales analysis does tell us that a LEED certified home does bring a little more money. That certification adds a little bit of value to that property. So any way we can look and distinguish what is a contributor of value, we try to break that out and be able to identify it so that when we are looking for comparable properties, if we're looking at a green certified home, we're looking for comps that are green certified as well.
So this is obviously a very important tool to have during a reappraisal process. When are some other times people can utilize it? How can people take advantage of this functionality?
So I think this will be a great tool for anybody in the real estate field, realtors and attorneys. If you're thinking about selling your home and you haven't made the call to a real estate agent yet, and you're trying to get an idea of what your property is worth, it's a great product for that.
Great. And you can also, if you have an appeal you want to make based on the property value notice you get, you can do that from this site.
You can do that. We hope to put suggest some procedures for appeal. When you do receive your notice in February, that you take the time, if you haven't done it yet, go to PRC, verify that our property information is correct. After you've done that, then I would suggest that you go to Comper look for the comparable properties, and they'll be the same properties that we used as comps when we established your value. And you'll have the opportunity to make the selection of comps, and you can print off a grid sheet, just like a fee appraiser would use, and you can submit that with your appeal to us.
Great. Was there anything else about the site you want to show us?
I think we pretty much covered everything. Can you think of anything, Keith?
No, but I will just say and reconfirm kind of what you said, Jeff, is that I would encourage people to go here and verify your information on your home. When Comper comes up, then it's going to be a great tool, and people should go there and look. Before you appeal your value, go and look at Comper and see what the comps are for your home and see if you truly need to appeal it or not. Because we're going to go look at those same comps as Jeff said, and your whole appeal will be based upon what those comparable properties show.
Great. Well, thanks, Jeff, for that walkthrough.
Sure.
We're going to get back to some questions. We have actually a question online about rate caps. So every 4 years, is there like a rate cap change, or even if you get revalued, is there a percentage max that can happen?
No, not in North Carolina. There is no percentage max. There is no, probably the person answering the question may be referring to like the state of Florida, I think has a rate or a percentage that the value can only go up in a certain year, but not in North Carolina. Remember, the statute says 100% of market value. So whatever it takes to get your property value to that 100% of market value, that's what we do.
Okay. So now we're going to shift topics a little bit to commercial real estate, just because it's not something we covered last time, but how do you value commercial real estate? Is it the same as residential?
No, not exactly. We use all three approaches to value, sales comparison, cost, and income, but we mostly rely on income for commercial property. Again, commercial property, it changes hands between typically investors, and if you're not an investor, then if you just want to own a property, you're still going to look at what that will produce for you in income. So that's how the value is determined. And that is typical for any commercial property and anywhere that you might buy it, is that what is its ability to produce income. So that's what we're going to look at. We have some special use commercial properties that we rely solely on cost, but we also look at the sales comparison approach. Maybe you got a commercial building and one similar down the street sold recently. So we're also going to look at that sale to see what it sold for and how that it compares to yours. But income approach is the primary method to value commercial property.
So the business owner has to submit income and expense info, or no?
It is not required, but what we do ask, and we often, during a reappraisal year, we'll mail out surveys to property owners and ask them if they would like to share with us what their income and expenses are for that top property. So let's say you own a hotel, we'll send you a form, and that form is going to ask you a lot of questions related to your hotel about what's the daily rate, what's the expenses, things like that, so we can help build models off of that data to show what other hotels should be worth based upon what one hotel or two or three hotels may be producing an income. But it is not required. However, I'll say again that valuing commercial property relies solely upon data that we can extract from the market. And we often ask for these property owners to please join us and be our partner in this and help us better understand the market, what the rent rates are, what the vacancies may be, what expense ratios may be. We can only build this from data that we receive from people in the market.
So when you talk about like commercial business, are you talking about the physical building or the business inside the building? Because some buildings have multiple businesses.
Yeah, so no, I'm talking about the physical property. Yeah, you're right. A lot of commercial buildings may have different many businesses in it, but each one of those businesses probably occupies a defined space and pays a rent rate for that defined space. Each one of them do. So we're not valuing the business. We're valuing the space in which the business occupies, the actual physical real estate.
Can the actual business within the building, how does that work with appealing?
So a business in that building will probably have a, they're going to have typically a long-term lease with the property owner. And a lot of times they'll have a triple net lease. Most people have what we call a triple net lease. And that just means that that tenant is probably going to have to pay the tax or a portion of the tax for that property related to how much square footage that they occupy. So I'm going to say yes, is that if that person leasing that space feels that they want to talk about the value of the property, we can talk to them about the value of the property since they do have an interest in it and since they are responsible for the tax. Ultimately, it comes back to the property owner as far as the value, but yes, the statute says that anyone can appeal, any owner can appeal, or anyone that has interest in the property. So having a lease on the property means you do have interest in it.
Okay. So this is kind of a slight sidebar because we're talking about reappraisal, but are there assistance programs for helping businesses pay their taxes?
So I would encourage anyone to go to the onebuncombe.org site. Those of you that have been listening over the past few months related to COVID, there is some funds that's been made available through the One Buncombe Fund for businesses who are struggling or who maybe needs a short-term loan. But go to that site. I'm not going to get into that, Max, about all this,
But they exist.
But it does exist, and there is the website. I think it's onebuncombe.org. Go there, it will explain to you that that program is available, and you might see that you can qualify for something, or at least submit your application to see if you can.
Okay, great. Well, we're going to shift a little bit to exemptions now. What is a property tax exemption?
So there are a few available in North Carolina. Elderly or the senior citizen, 65 years of age or over, and meet an income requirement, not over $31,000 a year. There's also a disability exemption. If you're 100% disabled and also do not have an income over $31,000 a year, you possibly could qualify for a property exemption. Now, those exemptions are the greater of $25,000 off your value or up to 50% of your property value. So that's a little bit related to what the value on your property is. So, but you'll get the larger of those too. The others are veterans, disabled veterans, disabled in the service-connected disability, up to $45,000 exemption, which means $45,000 off your value, not in taxes. So those are the ones that we typically look at with people if they can qualify. So again, let me say those again: the elderly, 65 years or older, totally 100% disabled, or a service-related disability for the veterans.
So these exemptions, when they get their letters in February, the exemption is not included in what the number is that they're given. It's something that happens after the fact, or is that put into effect with what the number they're given?
So no, if you already have an exemption, okay, that will remain. It does not take it away. It will remain, and it will apply to whatever the new value will be that we're going to send to you in February. However, if you're not getting an exemption, then the month of January is the time to file for those exemptions. So January 1 through January 31 is the listing period and the time to file for the exemption. So I would encourage anyone, if you have not looked into that and you feel that you qualify, then please call our office or go on our website. There's a lot of information you can quickly read through, which will give you an idea if you think you can qualify. And if you do, submit the application. Call us. You can get the application online. You can come by the office and pick the application up. We'll help you on the phone. We can help you fill out the application. We have a lot of services available to people who want to try and do that. So I would encourage you, if you think you qualify, then please apply for that.
So when they get their notification in February, like, how will they know the exemption's been included in that?
If some exemptions you will see on the form, not all though. So what I would encourage you to do is that you can go online, like Jeff was showing you on the PRC. You can go to even to the billing, and you can see if those exemptions are out there. Or just call our office and we'll tell you. We can look it up for you. If you qualified for the exemption and got it, then we sent you a letter. You will know that you're getting the exemption. And the main thing to remember is that a reappraisal does not take that away. You do not have to requalify for that. It stays on there and it applies to the new value. So if you're getting it now, there's nothing you have to do. If you're not getting it and you think you qualify, then please apply and let us see if we can qualify you for the program.
And you have to let them know beforehand because it's not retroactive.
It's not retroactive. No, it'll be from the year you apply forward.
And if they want to take advantage of these exemptions, they contact your office and learn how to, it's an application process, I assume.
It is an application process, and if you have access to the website, you can really get all your questions answered there, most likely. Go there, read about the different types of exemptions. The forms are even online. You can print them off and then just mail us the application and then we'll process it. Or when you get there, if you truly have a question that you can't get answered, then please call here. We have people here who are working with that program every day and are happy to work through it with you and answer your questions.
And speaking of exemptions, are there any properties, commercial or personal, that are completely exempt from the reappraisal process?
No, all properties will be reappraised. Even if you're 100% exempt, you still are reappraised and you still have a new market value assigned to the parcel. So there's none that go without reappraisal.
So even if you don't have to pay property taxes due to some sort of like exemption anyway, you still will get the reappraisal notice.
We still send it to you because what you got to remember is that you have two values really for us. You have an appraised value and you have an assessed value. The appraised value is what we're saying the property is worth and the market value. 100% of market value is the appraised value. Your assessed value would be the value that you're paying tax on. However, you can, if you're getting that, you can appeal either one of those values. So we send you the value even if the assessed value is 0. We still send it to you and give you the opportunity if you want to appeal the appraised value. So everybody should get one.
Everyone. All right. Well, you have a perfect segue into the next topic, which is appeals.
Yes.
Basically, it's what you do if you disagree with the value of your property. What can you do? How do you appeal? What is an appeal?
So an appeal is really you or any owner reaching out to us and saying, we don't agree with the value and here's why. But there's a process that you have to go through, and there's a process within the statute that you have to go through. So for reappraisal, when we send you your notice, that notice is also going to have a form attached to it, and it's going to say, if you don't agree with the value, you have a few options, and those options are, you can call us, we'll set up a meeting, or we'll talk to you by phone, or you can go online and fill out an appeal form and submit it, or you can fill out the form in which we have attached to the notice and send that back to us. So in that appeal process, what happens is that all those appeals will go back to the appraiser. The appraiser will review whatever comments are submitted by the owner of why they feel the value is too much or too little. We often even get appeals that says, hey, my value is not high enough. Will you go back and relook at it? So to be successful, here's what I want to point out in that process. To be successful, the property owner needs to do their homework. When you submit that appeal, you need to submit the evidence of the value with that appeal. As we talked about earlier on comparable properties, go look for those comparable properties, submit those with your appeal so we can also look at the comparable properties and see if there was something that went wrong. Is it overvalued? And if it is, then we're going to do the right thing for you and we're going to make it what it should be, and we'll send you a notice of that, of whatever the new value might be. But again, the appeal process is that appeal belongs to the owner. That's the owner appealing to us saying, relook at this for us and you know, tell us, is this truly a good value? And we're going to do that for anybody. But again, that owner needs to do their part and send in the information.
Is there a timeline for an appeal?
There is. During the reappraisal process, you'll have, we typically ask you to get the appeals back to us within 30 days so we can have the appraisers quickly review them and get a notice back to you. But every year, property owners can appeal their value every year, not just in a reappraisal year. Starting January 1 of any year, any owner can appeal their property value and can do that up until the Board of Equalization Review adjourns, which is typically in April, mid-April each year. But again, I would encourage you that if you want to appeal January 1 of any year, same for the reappraisal process, when you get the notice, we typically ask for you to get that back to us within 30 days and let us work that appeal with you so we can get you an answer as quick as possible.
So what are some things that people can do to prepare for an appeal?
Comparable properties. That's the big one. How did you arrive at your value? That's one thing that we're going to ask you if you file the appeal. How did you arrive at your value? And we need the evidence to support whatever that is. Now that might be, as we said earlier, homes in your neighborhood that have sold that you know about. Do we have your home completely listed correctly? And that Jeff mentioned that. Go online, make sure all the data is correct, make sure the square footage is correct, make sure we have your basement correctly, your fireplace, all the items, amenities of your home. Make sure those are all listed correctly. And these are things the property owner should do before they file the appeal. Do these things first. When we get Compar online, it's going to be real easy because you can go online, just type in your address and it's going to show you the comparables real quick. You can print that out and send it back with your appeal. You can send us photos. We typically, 99% of the homes in this county, we do not ever get to go in. So there may be something inside that home that we don't know about that you need to share with us. You can do that in a couple of ways. You can send us photos for us to look at, or you can set an appointment and have someone come and meet you at the property and we'll take a look at it. But again, all that comes back to that thing that I said, to be successful, the property owner needs to do their part and send us the information in which maybe you think that we don't know.
So the majority of what you use as tools to determine what the market value is of a house is pretty like set in stone. So when it comes to an appeal, you're just wanting to make sure that what you're looking at is accurate, because it's not about, well, I think it's worth more, or I think it's worth less. It's about, these are how we determine it. You have to meet these standards in order for it to be appealed differently.
Right. And you know, it's not, that comes back to really what I said. Do your part to be successful in that appeal process. We often have property owners that will send us in an appeal which just says value is too high. That's all we get. Value is too high. Well, that don't tell us anything. So that doesn't mean most likely that property owner is going to be successful in that appeal, because there was nothing submitted with it to say why the value is too high. The other one is that you cannot appeal based upon your tax bill. So if you're looking at your value and you're saying, well, my tax bill may be $1,000 and that's just too much, that's not a reason to appeal and will not be accepted. The appeal has to be about value, not taxes.
Is this something, this was a community question, is this something people typically hire an attorney for, or does your office provide guidance? Or?
You know, no, you don't have to hire an attorney. As I said, we have appraisers here, we have staff here who can help you through that process. I would encourage you, highly encourage you to first find the information, send us the appeal, work with our staff. Let's see if we can work through that to help you determine what a fair market value is. And then at any point you feel you need to hire an attorney or anyone else to assist you with that, then you're welcome to do that. But I would suggest to give us the chance first to work through it with you before you spend more money to try and get an assistance to do that.
Okay. Those were the main topics I had. We're going to get to some of the community questions we had now.
Okay.
So the first question that we have is, I misasked the question about the cap rate. This was apparently a commercial real estate question. The cap rate to determine value based on the income approach, is there a cap rate to determining the value based on the income approach?
Sure. I mean, there's a cap rate that we're going to establish from the market. So we look at sales transactions of similar properties to see what they sold for versus what their income is, and we develop what the cap rate would be for that property, and that's the capitalization rate that we would use in that valuation process. We also go to other sources too. We look for, we do subscription services to a lot of things that tell us what cap rates are across the Southeast, we also look at those because these are investors and cap rates directly related to what an investor, what kind of return they want on the property. So we are looking also not only just locally, regionally, and in the Southeast to see what these investors want in order to establish what that cap rate may be. So, but again, there is no, let me say it this way, there is no cap on the cap. The cap rate is what it is. And if the market says it's 5 or if the market says it's 15, then we look for the market to determine what that is. The property owner is welcome to, they can submit information about that. If you have evidence to show what the cap rate should be related to your income and your top property, then I would highly encourage you to submit that. Let us review it and let us talk to you about it. And we can also share with you a little bit of information about what cap rate maybe we looked at and maybe how we developed our cap rate.
And again, I'm asking these questions, but they're obviously coming from citizens. So if you want more follow-up information, email realestate.question@buncombecounty.org, and you can get the one-on-one. A member of the community asks, what if there are no sales comparable to my property? Is this something that ever happens?
No, there are always going to be sales comparables. It's just a matter of how far you got to go away from your property to be able to find those. Now, that typically happens in a lot of our rural neighborhoods. A house will sell in our rural neighborhood, and we don't have a tremendous amount of sales, or we don't have a tremendous amount of comps to that property, then we have to keep stepping out in a little further radius from that subject property until we find those comparables of what somebody is willing to pay for it. Different influence factors may come into effect there. Is the other property located in the same kind of location? Is there anything that impacts value of that property that doesn't this one? But that's pretty typical for any appraisal. But there's comparables. Sometimes they're not easy to find, but they're always going to be comparables for the property.
Okay. So what happens if somebody sells their property in appraisal year?
If you sell your property in a reappraisal year.
Sorry. Like, well, yeah, that was a question we got. I guess it means if the reappraisal happened in February and you sell your house in July, the tax rate or something, or what they would pay.
Okay, so we cannot adjust value based upon that sale. So if the reappraisal was effective January 1 of that year and you sold your house on March 1 of that year and you sold it for higher value than what we appraised it at, we are not allowed by law to set that value what you sold it for. Now what we do is that we look at that sale and we evaluate it and we analyze it to see why the value is different and see if we missed something in there as far as amenities related to the home. But that sale will have no impact directly for that year on your value. What that sale does, though, is it starts building the data that we would use for the next reappraisal.
Okay. And I think I'm about to learn something with this one. What is an allowable expense and what are the guidelines for it?
We must be talking about commercial again.
Yes.
So allowable expenses are only related to what would be connected to the property. Okay, so one that some people typically want to talk about is debt service. Debt service is not an allowable expense because that can go wherever the property owner wants it to go. Some finances more than others, so it's not really related to the value of the property. What we want to look at is what income, vacancy, collection loss, what are the management fees, what are the expenses to keep the property up and going, what are the reserves. You can't then look at expenses of what would be related directly to your business. So if you have employees, then the employees of that business has no direct relationship on what the value of the property is, so you couldn't use that as an expense. So hopefully that answers the question. The form that we give you as far as the income and expenses will help you through that. It actually asks for the specific expenses that are allowable. And if you have a question more defined about that, then please let us know or send us an email, and I'll get you a direct answer real quick on whatever expense you may be talking about, if it's allowed or not.
So we have two final questions, and we kind of went over the answers to these in the show, but if you don't mind to give a quick elevator speech to answer both of them.
Okay.
The first one is, will all property values change due to an assessment?
Yes. All property values will change.
Okay. And even if I haven't made any changes to my home, should the assessed value increase?
The assessed value will change. I'm not going to say it will increase, because remember I said earlier that it's a equalization of value, and the value could either go up or down, but the value will change. It's not very often, if ever, that we have a value that doesn't change. If you haven't done anything to your home, no improvements, and it's exactly like it was 4 years ago, your value can still change, because what you got to remember is that there's still appreciation in the market. Is that as longer you own that home, the more valuable it comes in the current marketplace. So yes, the value can change even if you didn't make any improvements to it.
Okay. Well, that is all. Wait, if I made major repairs to my road, will well, this is about taxes, not reappraisal. What about my neighbor's property? Does road access or road repair have anything to do with appraisal price or appraisal value?
We look at access. As long as your property has access and it is a reasonably good access, then we probably would not look at an impact on value. But there is a good possibility that it could be an influence on value. Again, every property is different, and that situation would have to be looked at. An appraiser would have to look at it to see what that means and then determine if it's an influence, positive or negative.
Okay. And one just popped in. Do any other counties use Comper?
There's a few counties across the state that do.
Yeah, I think Durham.
Yeah, Durham currently uses it. Does Mecklenburg also, Jeff?
I want to say Mecklenburg and maybe even Orange County.
Yeah, so there are a few that, along with us, that use it, but not very many.
Okay. Well, I said two questions and then I added two more, but that's all the questions that we have. I will give some final thoughts. Thank you so much, Keith and Jeff, for doing it again and for allowing everybody to get an insight to the tax assessor's office on the reappraisal process. Again, if you want to get in touch with them, you can email realestate.question@buncombecounty.org. Definitely visit their website. It's buncombecounty.org/tax. You can call them. I didn't write down the phone number, but it's on their website. What's the phone number for tax?
Yeah, 828-250-4940.
And you also have a live chat feature on your website.
We do have live chat. If you go on the tax website, then you will see the bubble pop up down in the left-hand corner. It'll give you an option to live chat with some of our staff here, which has become a very good tool. I would encourage you to use it.
And the tax collection office was closed because they were renovating, and now they are open again, and now there's more space in there, so it's more COVID friendly.
Yes.
You can also pick up the Citizen Reappraisal Guide at county offices that have front-facing services, or you can download the PDF from their website. And finally, you can just watch this again on Facebook. So any parting messages, Keith or Jeff?
So you brought up another, Max, real quick, is that anyone that got a tax bill should have received one of these in their tax bill. So please read that. If you have questions inside that reappraisal guide, then let us know. Be happy to work through it with you and answer your questions.
Okay.
Thank you, Max.
Thank you. And thank you all for watching. If you have any questions,
Thank you.
where to go.
Thanks. Bye-bye.